What's up everybody, Tom here with another video. In today's video, we'll be taking a look using our technical analysis top-down approach at the week ahead for the markets. We'll be looking at the S&P 500, NASDAQ, gold, Ethereum, and Bitcoin to try to get an understanding of where they might be moving next. And I tell you what guys, it has been exciting times in the crypto space. There's actually a whole bunch of things that we can learn from the past moves that are going to show us some of the key things that could be leading into what might be even bigger moves on cryptocurrencies moving forward over the next month. Let's take a look together right now. I'm pretty pumped for this one. Stay tuned. So first up guys, let's take a look at what happened in the stock markets last week. It's really important, even if you trade other instruments, to think about things this way. And that is to look at the broader market to get an understanding of what's hot and what's not. So here we've got the daily performance of the market on Friday before the close. And we can see here that it was all about tech still moving down. Microsoft, Apple, Google, Facebook, Amazon still moving down, while we did see relatively weak results across the board. Broader markets though, what are they telling us? Well, the market started slightly down here on the left, and we know that's mostly us, the retail traders, in the mornings. But as I always say to you, if they're selling into the close, that's Wall Street getting involved. And here, risk was off into the weekend. Look at this, strong selling in the last hour of trade. And that always shows us that Wall Street is going to be doing some risk adjustment and people were closing their positions into the weekend. Overall, in the broader markets, it was also mostly the more defensive kind of industries and areas that were holding their own, while technology actually suffered quite a lot, and of course industrials as well, almost down 1% each into the close. Again, most of the selling happened at the end of the day. So before we get stuck into anything else in terms of the technical analysis, I wanted to talk to you guys about this concept, and that is S&P 500 performance pre and post Thanksgiving. And this is from 1945 to 2016. So it's a couple of years out, but it still holds true in general terms. Now, what generally does happen is that this week is usually a positive week. In fact, the hype and optimism into public holidays in the US is a pretty real phenomenon. And especially around Thanksgiving, we generally get quite a nice bullish week. Now, the next week is an interesting one because what's actually been happening in the last couple of years is we've been seeing sell-offs after Thanksgiving week. We've actually been seeing a weaker market for that next week, then followed by very strong bullish movements into the close or into the end of the year. And that's what they call the Christmas rush, the second kind of bullish event. But what have we not got this year? Well, we've not got stimulus. And stimulus is going to be really a big question about things like Thanksgiving and about Christmas, because a lot of the reason the market was running was not only good times and festive seasons, but also because people are spending money in the economy, and generally that leads to some really strong numbers coming out of the US. This year, it may not be as good as we think. Maybe possibly it's going to be a letdown considering how the market is so high. So be very careful around that particular seasonal, but I thought it was worthwhile bringing up because now we're going to discuss Bitcoin and Ethereum really briefly. So Bitcoin and Ethereum are on a bit of a hype train right now, and you can see this with this Google Trends. Look here at the end, just at the end here, 12-month data, Google Trends has Bitcoin picking up quite a lot in terms of search. Now, if we go through the last 5 years, and again, if you selected worldwide or United States, you'd notice a very similar phenomenon. Notice over here, a very big spike up, and then of course the hype and the absolute craziness that was after that. Also, take a look at the dates. We've got here, 2017, just before Thanksgiving, we get these pretty high readings, and then it explodes out. And why do we think that is? Well, I believe it's because of this phenomenon, and that is, and I know this happened last time, and that was that everyone went home for Thanksgiving, they talked with their family, told everybody how much money they made in Bitcoin and cryptocurrencies, and then it just exploded with people's interest. Now, it wasn't all about Bitcoin though, it was about the side coins as well. And it's that psychology that even if you're a stock trader or you're a commodities trader or you're a currency trader, it doesn't really matter what you're doing. It's understanding that sometimes these types of things are going to come in and you're going to have a hype and anticipation of just a huge amount of traders coming into the markets. It happened this year due to, of course, the crisis in stocks. we saw the interest in calls and puts, as in options, skyrocket, not seen like the tech boom. And that's led to certain phenomenon that we're taking, consideration on when we're looking at the markets right now and doing our technical analysis. We need to be very sure of where the put call ratios are. So let's now take a look at what happened to Bitcoin around and after Thanksgiving last time. So last time it actually was already going up heavily into this event. Then it exploded out after Thanksgiving, after everybody told their family members how much money they'd made. If we take a look at Ethereum, very, very similar. Right around that Thanksgiving week, it comes out of a very strong pattern over here, resistance. And I remember this incredibly well. And then just completely explodes out during December into that January period. What have we got over this period? 2 key big events with formal gatherings, or at least people discussing stuff with their family. You got Thanksgiving and you've got Christmas. And notice the hype really died down pretty much after New Year's, after our calendar had ended and the new calendar had started. And this is a pretty replicatable phenomenon this time. It's almost moving very, very similarly. We'll be talking about Ethereum a little bit more in just a moment. And then, of course, we've got XRP as well. XRP, just after the weekend, of course, like all of these alternative coins into Thanksgiving, we see an explosion that was just so fast, followed by a massive sell-off in the new year on XRP. Again, explosion coming out here through the weekend. Now, this is not exactly very technical, but what it does show you is that retail community are trading it. They're telling their friends, everyone's talking about it. And this is that elevator theory. When everybody's talking about something, you need to pay some form of attention, but you also need to be very careful. I'll tell you a little story. On Friday, I was going down to get a coffee. Guess what happened? My barista literally said to me, "Hey, Tom, you on that Bitcoin? Look at my Bitcoin." He's showing me his wallet. He's showing me how much Bitcoin he has, and he was talking about it. Now, I can tell you that guy I've known for a long time. He'd never traded or even had shown any interest in trading. All of a sudden, he's on the Bitcoin wagon. So either he knows something very, very crazy, or it just shows you that everyone's piling into that asset right now. Even if it's small amounts of money, it all adds up just like last time. So always pay attention to those things, guys. It does make a difference. So let's now talk about Ethereum and just talk about what's happening right now in terms of the market. So we're seeing very strong pickup here, and we kind of thought this would happen. We talked about it in last week's video we did on Thursday. It was about here then, and of course now it's started to explode out. So if we think about where this particular pair is heading towards, well, it makes sense for it to have this explosion, and then it also makes sense for it to potentially go to the next point of resistance. Is there much resistance through this? Well, look, I think it trades like basic psychology, and that is that it goes towards round numbers. $600, $800, $700. They're the types of things that have been stopping cryptocurrencies like Bitcoin recently. So we've talked about this $800 level, and we've talked about how that was previous resistance in the large spike up, and then it sold off kind of briefly before going on to the next level. And then when it actually did that kind of bounce after the blow off, it came back to $800 again. So I think that's a target that, while it may seem insane or crazy, could certainly be there on cryptocurrency in terms of Ethereum. It's kind of like when we look at Bitcoin, it went to almost that $20,000 reading here. And in some places it did well over, go over $20,000 actually. And here we're now sitting at 18,710 as of the weekend. Is it aiming for that 20K again? You would think so, but do you need to be careful around that level? You certainly do, because look how far away we're getting, even from the basic 20 exponential moving average here on the daily. Now, I've said this a few times. If you're trying to follow these aggressive trends and you're trying to get involved in them, what you're generally wanting to do is you're generally wanting to find reoccurring moving averages that are holding this particular pair in. And that means that every time it's coming down to something like this 4-hour 20 exponential moving average recently in this next even more aggressive pickup, it's been bouncing off that level and finding buying pressure. Now you can see that and becomes a reoccurring thing, especially once it happens 1 time, 2 times. But this is the only way that's easy to get into through these types of crazy trends. And that's because you don't always get much market structure. Like here we had resistances that became support as well as a moving average. That is a tick. That's a great area. We talked about that on the channel, all of us together. But you're not always going to have that. Like maybe here we had a little bit of resistance, there's the pickup and there's some buying pressure that comes through. Again, that's kind of like a tick. It's decent, but you need to be very careful because it's not really acting like a normal market. It's just going kind of bullish, bullish, bullish. So moving averages are going to be one of the key things that you add to your Ethereum cryptocurrency kind of charts moving forward. And I thought that was worthwhile mentioning with all of you because you can use this in stocks, you can use this in anything else. So let's now talk about the stock markets as well. Before we get into, of course, the S&P 500, let's just quickly talk about the VIX or Fear Index. The Fear Index spiked a little bit there on Friday. We got to a 23.7 reading, and we're still not really that high. But things I'd be looking at this week would be a break and close above this little wick here. Why is that going to be important? Well, it's basically showing that it's considered this level down here at this 22.5, 21 kind of area. And if it gets through this zone, it's probably also be going through a 50 exponential moving average on the 4 hour. And we should see further spiking up, possibly even to the 28. So that would be a very interesting kind of level and a little bit of a base and accumulation here on the VIX Fear Index. It makes sense as well when we're thinking about the shutting down of certain states in America and the whole situation uncertainty with this crisis right now. Going to the dollar index, here is the weekly on the dollar index. You always want to have that 92 set as an alert. Incredibly important fight between the bulls and the bears at this zone. We've talked about that a huge amount. When we go down to the daily, other levels that you want to reach this week, 93, a little bit plus. If that happens, that's going to signal really buying intent. This would be the key level I'd be looking at. And if we go back over to that weekly again, I'd also be paying some attention to the 20 exponential moving average if price does reach that, as it found resistance there. And this is a very common moving average for dollar index to pay attention to. So just be wary of that 93 and the 92, the two 1 cent gaps this week on dollar index. So let's now talk about the Dow and what's happening there. We'll start here with the daily. And the daily Dow came off that 30,000. We did the live stream. We saw this live multiple times actually, where it reached this level and then found weakness after the week. So selling pressure off the 30,000. The Russell 2000, the smaller caps, they also hit a very important resistance and started selling off it. So it all makes sense for a pullback here. Where do we expect though the Dow to go? Well, based on this reading right here, we would expect it to go back to at least the daily 20 exponential moving average. If we consider that level as well, there's going to be the previous resistance here, supports across from this level, and this is about the 29,000 and the 20 exponential. So all of this level should see intraday buying, if not day trade buying around this area. It's worthwhile targeting and having a look at and making your own decisions this week. So that's the Dow 30. Basically, any break, of course, above 30,000 is going to be incredibly bullish, and we would see a retest of this zone basically become an incredible little buying zone on the smaller time frames because the resistance would act as support. But for the sellers, this could be some pressure buying here. And then, of course, if it gets under there, we're looking back at possibly the 28,000. We've got previous resistance as well, and it could be support with some other moving averages and Fibonacci pullbacks through that zone. NDX, here we're using the real NASDAQ, and we've lined up kind of some key areas for the week ahead as well. We've basically got this resistance line here through the 12,153. And you might say, Tom, what about this thing here? What's going on there? Well, yes, it did gap up and open, but notice it didn't hold. Remember, body closes are the key when you're looking at markets. The close is the key. That's what I always say. And it didn't get through. It kind of got up, gapped open, closed below. This is the NDX, remember, the real market here. So what we're looking at this week, very, very similar to really the Dow, is a small pullback that could be very, very decent potential to be looking at. We've got two really key zones here on the NASDAQ. We've of course got the resistance, but we've also got the pullback down to this 11.6. Previous support, resistances across the board, very key zone. Little smaller time frames. This is the 4 hour here. If we get through the 11,000 kind of 850 zone, that's going to form a new trough. So basically a new low, and we should be seeing further selling pressure coming into the NASDAQ. And I wouldn't be surprised at all to see it come down to like 11.6, but there should be some buying pressure there from this particular pair. So just always remember 11.6 worthwhile having on your charts for the week ahead. Now the S&P 500, and this is where we'll do a little bit more top-down analysis. So we've got here the weekly, and this is the old trend line that we had drawn up, and we kind of thought that if the market got through here, this would act as, of course, a key level with key buying pressure. Notice the market comes right down to this 35.20 area and then buys straight off it, forms a long leg doji, and then we have really another kind of bearish, not very decisive candle coming through last week on the close. We go through the daily. Again, we're looking at these particular charts. Not that much that looks that interesting here for the SPX, but we do note that this trend line here and the previous peaks around this 35.20, 35.30 area and the support here is where the 20 exponential is on the daily. Now, it's very similar to the Dow, yeah, with this one. A smaller pullback here, followed by maybe some buying pressure around this zone, could be in order. It's definitely a zone that we'd be looking at in the markets. Now, if it gets through there, we've talked about this a few times as well, further down it goes. And what is going to be the main indicator and the main thing you want to do here? You want to take a fib of the last move, and you want to target really usually between the 38.2 and the 50 fib area. So somewhere in this zone. Now, we're probably targeting a little bit lower here, and I'll explain to you why. There's previous strong resistance levels and strong support levels all the way through that 34.20, 34.30 zone. And if the market's to pull back there, you've still got that 61.8 or the golden fib level that a lot of people like to use. But I think the 3400, 3420 zone would be a logical conclusion based on a couple of things, even when you look at futures trade. So if you look here at futures trade, here's the weekly. If we go down to the 4 hour, what we're going to see is that this 35.20 has been touched multiple times during the futures, very well respected. If the market gets through there, what's this look like? Pretty much a little double top where we've basically got a resistance that's been formed at 36.40. We've then got, of course, our trough here, our intervening point. And then if we take that and extrapolate that out, notice it comes to 3,400. So I think that this could be in order and the pullback could be more severe than we thought. It would probably be very, very similar with the NASDAQ coming down to like the 11.6. The Dow would have to come down obviously further. But if that does happen and gets through that 20 exponential on the daily, further selling could be in order. So just remember, down here, closing through, pick back up, find previous support as resistance, and then further selling pressure. A very interesting area to be looking at for traders, investors, everybody else this week. So let's now talk about precious metals, and it really has not been the last couple of weeks good trading for these pairs. This is silver and gold. So silver in particular has been a really, really strange kind of market. We've just lined up 50 cents and dollar areas for silver for some time. This was a great sell zone. You can see here previous supports acted as resistance, and it was around a 26, perfect little area for sellers that got in there. We're in the middle of kind of two areas at the moment. A 22.50 support, we have a $26 resistance, and then we've got this kind of $24 mid support resistance through. And we notice that there's not that many closes underneath this area. And when it did close underneath, it went quickly to 22.50. So it might be worthwhile considering that this is a very important level to see daily closes each way for silver for this week. What about gold though? Well, gold, we maintain the exact same thing we discussed the other day. 1900 resistance, incredibly important zone. A break and close above here is going to trigger a whole bunch of buying pressure, possibly even up to the 1960 zone again, and definitely into these previous resistances and supports over here. Very important zone. And a close below 1850, boy oh boy, does that open up 1800. You can see here the 200 simple moving average. We've talked about this together so many times. So gold, another one to watch. Very interesting week on gold, guys, as well. So other things in the calendar that are worthwhile thinking about, FOMC meeting minutes. This is Thursday, November 26th, my time, 6 a.m. Now, of course, you want to set it to your time. So go to forexfactory.com, go to calendar and set it to your time zone, because we have a very international audience with people from Europe, Asia, America, everywhere wanting to, of course, trade the American markets and wanting to know when the news is coming out. So remember, forexfactory.com, set your time zone, and then, of course, make sure you put your daylight savings time on as well. All right, guys. Well, I wish everybody the best this week. Obviously, if you enjoyed the video, please remember to, of course, give us a thumbs up, subscribe, and hit that alert button. We hope you enjoyed that little bit of talk about seasonals, and we'll have to see what, of course, comes next. Expect a lot of content live Monday, opening bell session as per normal. Come join us, and we'll see you then. Make as much money as humanly possible, guys. Bye for now.